I'm looking at Oscar, the insurance business, health, and what a year it has been for that space. COVID accelerated telehealth, perhaps people's willingness to explore new platforms and methods, but it also added to costs. How should investors look at the impacts on your company?
It's great to be here, first of all. And yes, what a day. It's amazing to be here. And I'm proudest mostly for the team at Oscar and for the members. I think we've done a tremendous job in the last 8 years in changing the way health insurance is looked at by people and by folks in the healthcare system. So COVID, I think, in my view, has an accelerating impact on shifting the healthcare system more towards consumerization, towards virtual, and towards more risk sharing with providers and payers. And I think Oscar, we sort of designed the company to be at the forefront of all three of these. I think in 5-10 years from now, you will buy your own healthcare experience. You will stick with that over decades. We can invest in your long-term health if that's the case. COVID's putting the right kind of pressure on the healthcare system to really start evolving that direction. And I think for us as Men's, we have now virtual primary care first plan designs in the markets where members can directly pick an Oscar physician in the cloud and have that be the primary care physician. That is off to a fantastic start. It means we work much more closely with health systems who want to make the move into risk, into individualization, in longitudinal care management, and those are the powerful trends I think we're sailing in.
And Mario, how important are online reviews and sort of reputation management for a company like yours? I've seen, lots of things out there about Oscar, patient experience compared to other insurance companies, some of it not favorable. But then at the same time, you guys are connected to Jared Kushner, former President Trump's son-in-law, which is going to bring a certain type of attention and perhaps criticism that might not have to do with the product. How important are those online reviews?
I think we certainly something we watch for sure. I think we generally think that we're ahead of the pack of anybody else out there in member engagement and in showing up for members and making sure they get the best care at the most affordable prices. I think you see that also when you look online, and that's to me is the whole reason we started the company. I mean, the company was started based on my co-founder Josh and myself having experience in healthcare that we really didn't think were great. Complicated and overly costly birth of my first child. Noah, who's now here at the stock exchange with me today as well. That's what we've been investing in. I think we're very far ahead of the pack there of the rest of the insurance and healthcare industry. And that's going to keep being our focus.
Yeah, I liked your sort of origin stories that you laid out in your IPO prospectus. Mario, I wonder if you could walk us through the pricing process leading up to this debut. I mean, for many of the unicorn IPOs that we've seen this year, we've seen opening prices surge above the IPO prices, which has led some critics to say that they were mispriced. You guys raised your price range and then priced above that at $39. It would seem, based on your indicative range right now, that you guys priced it pretty well. How did you account for, what's been a red-hot IPO market and the rise of the retail investor, if you did at all? To me, the most important thing about the company has always been we never really celebrated fundraisings. Those are not milestones for us that are of all that much importance. We wanted to make sure we have the capital to invest in a better healthcare experience and better outcomes for our members. And I think that's what we optimized for. We made sure we had the right amount of capital coming out of the process at a price that we thought was fair for everybody, right through the middle of the fairway there. I haven't honestly even looked at whether the stock is open or not this morning. Obviously, we'll be responsible shareholders, that's for sure. People can trust us with their capital investing, but it's going to take a while. We told people at the beginning, our first investors coming in back in 2012, 2013, that this is not going to be an easy story. It's not going to be an overnight success. It's going to take a very, very long time. When we started in New York State in 2013, we were the first newly licensed insurance company in 25 years or so in the commercial greenfield, and that's just a trail we blazed, I think, that we're going to keep being on. There's one sort of interesting thing, which is that in almost every single way in which we could have chosen to go, which healthcare market segments, how do we go about it? We chose the always most difficult one. That's why people work for Oscar. That's why I'm in the company. That's what makes it the most thrilling and fun, I think. And honestly, that's what I think is going to make the biggest difference in the long term. And this is another one of these days where, great, we can show up again in the evening. I got to go back to work now and look at my dashboards and make sure members are happy in the way that they are. And that's what we're all about.
Shepard Smith here. Thanks for watching CNBC on YouTube.